Well, now we are headed back out to the Economist Buttonwood conference at Pace University today, where our Erik Schatzker is joined by special guest Michael Nobrega. He's the CEO of one of Canada's largest pension funds, the Ontario Municipal Employees Retirement System. Erik?
Thank you very much, Margaret. Michael, glad of you to join us. Let's talk about the role of alternative investments. It has become somewhat debatable lately as it concerns pension funds and endowments because they have fixed obligations, and many of these investments aren't liquid. Omers, as your fund is called, has almost 50% of its assets under management in real estate, infrastructure, as well as private equity. Do you feel that it's sensible, given what we've seen happen, given the liquidity troubles that places such as Harvard, for example, have run into, that assets of that nature should be that concentrated in funds like yours?
Well, we have taken a very deliberate strategy over the last 10 years to actually move away from the volatility of the public markets, where we were 80, 90, 10, 90 in the public markets 10 years ago. And now the board has deliberately actually forced us to actually move to alternative investments. So Omers has done this over a 10-year period. And based on the empirical evidence that we have, we think it highly supports what we have to do in meeting our fixed obligations in the future. So we feel very comfortable where we are right now, that roughly 40% of our investments are in infrastructure, real estate, and private equity, and the rest of it is in actually public markets and fixed income. We always have to be in the public markets because we need diversification, we need liquidity, we need hedging strategies, and so we have to be there. But the fund eventually will be in somewhere in the neighborhood of 45% alternative assets.
Alternative assets. So in fact, over time, you're going to raise the percentage of alternative assets that you hold.
Yes, that's
relative
correct.
To the rest, relative to total assets.
Yes, that's correct. That's correct. The rest of it would be in fixed income, and the other will be in public markets.
Public equities.
Public equities, globally.
Now let's talk about one of those alternative assets, real estate.
Yes.
Omers owns one of the biggest commercial real estate portfolios in North America, Oxford Properties.
Right.
A lot of your concentration, a lot of your exposure is in Canada, where
yes.
things haven't been nearly as bad as they have been here. But we hear so much about the looming problems in commercial real estate. What's your view?
Well, first of all, in respect to Omers, we don't have the exposure in terms of refinancing our assets. Secondly, in terms of the valuation of the assets, our assets are fairly concentrated in large-scale alpha assets, we call them, in the commercial retail and office towers. So, and our tendency is very high. It's been consistent. Our retail sales in our malls have been above, actually. It's grown a little bit this year, but not a great deal. But so we don't have a valuation issue. Now, I know many of our capital pools, especially in the United States and other parts of the world, they do have problems in respect to the refinancing coming up, and there's a looming problem, but Omers itself is not an issue. And the reason that they have these problems is because the vacancy rates has been very high in certain parts of the global real estate economy. But Omers itself, I think, is fairly safe.
Michael, I think Margaret, my colleague in New York, has a question for you.
Hi, Mr. Nobrega. Margaret, Brennan here at our studios. I wanted to quickly ask you, there's tremendous debate in this country right now about the placement agent industry. CalPERS, the largest pension fund in the U.S., saying it's reviewing the placement agent industry. SEC, as state authorities are. Are you concerned about this? And secondly, should public pension boards be making investment decisions?
Well, Margaret, the noise is so much in the background, it's very hard to hear you. Maybe I can ask Erik to repeat.
Well, I'll just repeat the question.
Sure.
So CalPERS,
yes.
California Employees Retirement System,
right.
This whole pay-to-play scandal is beginning to blow up in California. That $50 million was paid to a board member for advising, or at least payments were channeled through a board member to advisory firms that tried to obtain business or investments through CalPERS. I mean, how much of a concern is that? Is that tainting the entire pension fund system?
Well, I think that's a breakdown of governance. And I think you have to, that maybe just be a one-off. It's unfortunate it happened the way it's been portrayed in the papers, but I think we should wait for the facts to come out before we make quick conclusions.
And the other question that she had, I think, Margaret, forgive me for
Yes.
paraphrasing here, is that public pension boards
Yes.
make investment decisions. Those are highly political organizations. You know what? I'm afraid we've run out of time, Michael.
That's fine.
I do want to thank you for joining us.
Thank you very much.
That is Michael Nobrega. He's the chairman and CEO of the Ontario Municipal Employees Retirement System. Margaret, back to you.
Thank you, Eric, for bringing that to us and for working through our audio systems here.